kind of still learning yourself and learning a lot about yourself. So like you got, as you all heard me talk about, you got to learn if you're a revenge trader, if you're a FOMO trader, um, if you're someone that can't walk away from a trade, if you're someone that wants to take more trades when they're winning. You got to learn all that stuff about you. And so your emotions are going to be all over the place. A lot of being able to control your emotions during trades comes with time and just experience. You get to a place where you're confident and you know exactly what's going to happen. And as you've seen with my mentor, Humble Mike, I mean, he knows what's going to happen. He calls it, and he just sits back and just lets it play out. Enters the trade, sets his stop loss, his TP, sets his partials, and just lets it run. Um, and so a lot of your emotions come with time and just experience. There's really not something that's going to help you um, to the quicker path of being able to control it all during your trades. For me, it took me around like two years, just about to where I can hop in a trade and just let it sit on my hands and just know it's going to play out. And even if it doesn't play out, that's when you trail stop. So that's when you set partials. You should always set partials in a trade, especially if you're going for, and this hops into the next question, and this, especially if you're going for a bigger target. If you have a feeling that if when you look on the higher time frame and you see what next draw on liquidity is, and you're wanting to aim for it that day because the PA is really good. And I mean, it doesn't have to be just the PA is really good. If that's your target for the day, well, then set partials, enter the trade where you know there's a rebalance in price, where price shouldn't have to continue up, shouldn't have to continue down. And you trust that from this point forward, it's going to go for your target. And even if it doesn't, I mean, you can't control that. There's always going to be days where everything could have been perfect for you on that trade setup and just for some odd reason, it just doesn't work out in your favor. It doesn't mean you're a bad trader. It doesn't mean you don't know what you're doing. It just means the market that day didn't want to go for your target. And I guarantee you, millions of other people took the same trade expecting the same target. It's just I've entered trades where the market rimmed me on $3 to my TP and then went the complete opposite direction the rest of the day. Created relative equal lows on the high 4 hour time frame, and then next day just ripped down to them and to hit my target. It doesn't mean it doesn't you didn't do anything you traded improperly. It just means that the market wasn't going for that today. It went for it collected enough liquidity to downside to then push up to buy side, which now that it's taken buy side, what does that mean? Now it can go for sell side. And what do we have on sell side? We have a bunch of relative equal lows on the high time frame. That's a huge draw on liquidity. The market's going to want that. Um, Knowing when and when not to exit trades and how to disconnect yourself from P&L, when and not to exit trades. I mean, you shouldn't have to close out trades. I mean, the only time I've ever closed out trades is when I freaking meant to do a sell and I did a buy, or I did a buy, I meant to do a buy and I've done a sell. Um, when I've the time I'd be exiting trades is when it hits my stop loss. Um, and I trail if I'm going for bigger trades, I'm going to trail my stop loss. You should be trailing your stop loss to break even once it's taken your first partial. You should trail it to the next low or the next high or the next fair value gap that's been tapped into already. So you can put it above a fair value gap that's been tapped into. So say price takes some liquidity, pulls back into a fair value gap, and then continues further down. Well, that fair value gap's been tapped into. It shouldn't have to return to it. The market should not return to it on a good PA and on a good low liquidity run. The market should not have to return to that fair value gap. So you can set it above that fair value gap on top of the candle. You can set it above a high that you believe the market shouldn't have to come back and take. If it's going to continue further or if it's going to continue higher, set it below a low. Set below the low of a fair value gap, a breaker block. If the market's come and tapped into a breaker fair value gap and price is going the other direction in the direction that you're headed, you can set it below those things. It doesn't have to be directly between below a low or above a high because the market could come back on below a low or above a high. Market could come back directly to that just to take that. Because say you're in shorts and the market is pushing down but it created relative highs on the 1 minute time frame. Well, the market may want to come back and take those relative highs because what happens after it takes buy side? Now it can take sell side. So it could come back for those highs, take them, and then run that low that you're targeting. And what happens? You get wiped out of your position. Um, but if you look at where they're touching, it could be a fair value gap that's in that area. So you could set it above that fair value gap or below it, depending on which way you're expecting it to go. So it's not always best to set it above a high. You'll see people use, like I said, breaker blocks, order blocks, fair value gaps. They'll use fibs to set their stop losses at what, 75%, 100%, 50%. They'll use wicks, um, percentages of the wicks, because the market has to touch every wick. The candles are always going to come back and touch wicks. And that's when you get the worst choppy price action, is when you have a whole bunch of wicks. Because the market's going to go up, down, up, down, up, down to touch all those wicks. And what happens, you get caught up in price, you get caught up in chop, and that's where most people blow their accounts. So you shouldn't have to exit trades. The market should tap you out either at your stop loss or tap you out in profit. If you're going to exit a trade if you get caught up in chop. Like if you're in chop and you're in profit, then I would just exit it. There's no point in just sitting in that for a long ass time. I've sat and chopped for 3 hours before it finally hit my TP. I don't, that's not what's an extra few $100s gonna do for you to sit to waste your time for 3 to 4 hours. And you're not gonna want to just walk off and let it play out. You're gonna want to sit there at the screen because you're gonna be stressing out. Is it gonna hit or am I gonna lose money? Is it gonna hit or am I gonna lose money? Like you should either just set it to break even or set it slightly into the positive. So whatever happens, if it closes out $10, $20, cool, you made 10, $20. Cool, walk away. Um, and how to disconnect yourself from P&L. The best way to disconnect yourself from P&L is to just set your money and how it shows your money, set it to ticks. You're not seeing how much you're making or how much you're losing. You're now focused on just the trade in itself. And you really can't connect. I mean, you can disconnect yourself from P&L. When you're focused on P&L and you're not focused on just the trade in itself, you've already lost the trade. Um, you have lost the trade at that point because you're focused on how much money can I make on this trade, whereas how much can I lose. You're not even focused on, okay, is the market going to take this? Is this market going to draw back into here, respect this area, then go and take my low? Okay, so this is the area I should be in to where when the market pulls back, it's going to rebalance to the upside, so it won't have to continue further. It's going to draw off this high, draw liquidity, and then it's going to take my low. Okay, so I'm going to enter here. Doesn't matter how much you make or how much you can lose. Pick your amount of contracts, enter the trade, turn off your P&L, set it to ticks, and focus on just the trade. Winning is the bonus to this all. Winning money and getting paid to do this is the bonus. That's the benefit of it. The whole purpose of doing this is to learn how to trade and trade successfully and consistently and profitably. Getting paid to do it is plus side because not many people have the knowledge that you guys have or just talk shit saying it's gambling because they don't understand the concept, understand the knowledge that goes behind it. So they'll sit there and talk smack about it when us, on the other hand, we have education behind it all and know how it works. Um, but the best way, I mean, just disconnect yourself from P&L is, like I said, turn on ticks. You're focused on the ticks at that point. You don't see how much you're making. You don't see how much you're losing. You can get into a mindset of where you know, okay, 20 ticks is going to make me lose 300. It's a beneficial to still at least know how much you can lose. So if anything, you can turn off your P&L um and you can just leave on your loss. So like you know how much you can set like I'd have to show an example. But there's a way you can set it up to where when you're setting up your trade, it'll tell you how much you can lose. And then you can change the how much you can make to ticks. That way when you're setting up the trade, you don't see how much you can make. And then at that point you just enter the trade. Um So that'd be the most beneficial thing if you're too concerned about your profit and your loss. Um, those are the biggest things I would say. Emotions run wild in the beginning. It's about learning the strategy, of course, but then following that, you can know the strategy, but you got to learn what type of trader you are. So being able to learn to control your emotions comes with learning who you are as a person. Once you learn who you are as a person, consistency is the next thing. Um, and once you learn consistency, then now it's about profitability and scaling. Knowing when and when not to exit trades, like I said, you should be setting partials, you should be setting your TP, and you should begin to trail once it hits your first TP. That's what I do. That's what my mentor does, especially if you're going for bigger trades. And again, the best way to disconnect yourself from P&L, don't focus on it. Focus on the trade. To set it to ticks. Set your stop loss to ticks, but you can still you set the price number that you want your stop loss at on the left side, and then you set it to ticks on the right side, so you don't see how much you can profit. But on your stop loss, set it to the number on the left side that you're targeting, and then set your price number so you can see the stop loss. Because of course you don't want to set it to ticks and then your stop loss be $500 and you don't know that it's $500 because you can't tell. But don't focus on the profit. You can focus on the loss. That way you know exactly how much you're risking at that point. Um, so that kind of hopefully that covers and helps KB with what he was asking. Let's see what the next thing is. Okay. Um, Gold trace. As per getting into stone-like mindset and having a mechanical approach whereby there should not be any scope of emotions once you are in a trade and develop that kind of mindset, what are the attributes and how one can develop that? And the ways to make trading boring by engaging in trades and only a specific time of the day to be elaborated. Um, hopefully what I just said, Gold Trace covers a good bit of that. Because it seems like you're asking like how to control your emotions and how to approach trade controlling your emotions, how to develop the proper mindset. I mean, my mindset is like, bro, who you lost a trade, so what? Cool. Millions of other people just lost a trade too. What's going to happen from here? Are you going to sit there, be pissed off and upset, or you can take a walk real quick, clear your mind, and come back and try to take another trade. Don't revenge trade. Don't try to risk more now and leverage more um to make your money back and to make some on top of it. Shouldn't be like that. If you're leveraging too high, then yeah, your emotions are going to be even more all over the place, and you're going to want to exit trades, and you're going to close out your trade early, and then watch it go to your TP, and then you're going to be like, damn, bro, I could have made 6,000 more dollars if I had just sat on my hands. Well, it's because you're over leveraging and you're not ready for that. When you're ready for it, that comes with time, being able to sit through trades that make you $1,500, $2,000, just being able to sit to the end of it or until the market comes back and hits your stop loss and profit. Being able to then sit through $3,000, $4,000 trades. It comes with scaling, comes with time, comes with experience. It comes with learning how to control your mindset. I enter trade saying, okay, I'll either lose or this trade will hit, but I'm not going to sit here and watch this trade hit and not have taken a chance. As many people tell you, scared money don't make no money. If you sit there too scared to enter a trade because you worry you might lose, you're going to lose then. Because you're going to enter a trade later on after it's started to move more. Your entrance is going to be terrible, and what's the high probability of it coming back and hitting your stop loss at this point? Very high. You miss the opportunity. So I'd rather sit there and enter a trade and let it hit my stop loss than let it go to my take profit, knowing that I could have been a part of that. Um, engaging in specific times of the day. Um, specific times of the day. My favorite's 9:45 a.m. or 10 a.m. Eastern time. Those are times when the market's going to respect the PD array and continue further, or it's going to reverse. And it all depends on what's going on in the market. But if it respects a PD array, you'll see a continuation. If it reverses there, well then of course you're going for the other direction. And then of course, the open. You don't want to immediately trade the opening range gap. You want to see what the market's going to do first. You want to see if it's going to take if it takes buy side or sell side right at the open. And then you want to let it play out for a few minutes. But you can trade the opening range gap if you get dropped to regular trading hours and draw out the opening range gap with a fib. The market's always going to hit 50% or 70 or 100%. Or it's going to reject it completely and go the other direction. So that's a good thing you can trade at the very open. So you have the opening range gap at market open. I would wait at least 5 minutes unless you're certain at the very start of the 9:30 that it's going for it. And you see it respect the PD array and start heading that direction. Then you can enter if you want to. Or you can take a starter position. Then you got the 9:45 and 10 a.m. The next best time is going to be the macro of the 10:50 to the 11:10 a.m. Eastern time. That's going to be your next best time to trade is going to be the macros. I really wouldn't care to trade the 11:50 to 12:10. Not my cup of tea. That's when everyone's going to lunch. That's when price is going to suck. Um, Even though sometimes I've seen it really move at that time, but it's rare. Um, your next best time, I would personally tell you is 150 to 210, 310 to 3 or 250 to 310, and then the 350. So it's the last 10 minutes and first 10 minutes of every hour. I wouldn't care to trade the 11:50 to 12:10 though. But after lunch, after 1 p.m., I'd start trading the macros again. Those are set times of the day where the market's going to take buy side or sell side liquidity. It's going to, and you can be a part of that. You don't even have to sit on the computer that long. You can go freaking sleep in till 1 o'clock in the afternoon, hop on at 150, trade for 20 minutes, take a quick short or a quick long, go back to sleep. You can take your lunch break and do that if you're working a 9 to 5. You can do that every day. You don't have to sit on the computer for an hour, 2 hours, 3 hours, 4 hours, whatever it may be. So I know some people sit on the computer all day. You don't got to do that. Um, let's see what he said next. Elaborate the mindset behind which you come up with your levels, which are very far. What made you think the market can reach that level and how to get that mindset in everyone? Okay. Um, Let me jump to this. Mike, I felt so bad when you messaged me about you and B were in longs, and I was just sitting there waiting for shorts. I don't know if you remember this day. I was like, I'm not going to tell him. I want him to learn. So I had been sitting there for a good majority of the night, um, waiting for to take longs in a position. What day was this? The
Oh
26th?
yeah, I remember this day. Yeah, I think we got stopped in profit.
Yeah, you and B were in longs that night. So I was up at like what, 12 a.m.? Yeah, there it is. Um, well, I think it says the 26th, and I'm looking at the 26th. Oh, I'm on 15-minute candles. That makes sense. But I was waiting for this 1 hour buy side liquidity to get taken. I'm gonna pull it up on my computer too, so I can kind of show y'all what I was viewing when I took this trade. So we got 26 there. I have to find where it was. It was right before midnight. That's what I
Yeah, it
can
was
tell.
11:41.
PM.
Yeah.
There it is. Yeah, that's it right there. Yep. Okay. Um, so I had 1 hour buy side at 409.50. Draw 1 hour BSL. But I was waiting for market to take this high I entered shorts at the very top, and I set my targets to here. And it was a paper trade. I'm not going to sit here and say I made money off of it. But this is what my thoughts were on the market. And I wish I had taken it as an actual trade because it played out freaking beautifully and it wiped everything. It wiped what I wanted to see. Um, but we were in a bearish run. And so my thoughts were still bearish. Oh snap. I mean, I need that's an opening range gap. So I'm gonna go ahead and change my screen so y'all can see why I draw it up. Okay. Well, let's just there we go. Um, so if I jump regular trading hours, pretty sure it's this one right here. No, it's not, because it would be inside this line. So it must be an older one. Or 30 is the high on it, the opening range gap. Interesting. I don't. Oh, oh, found it. So this was why I wanted shorts. Okay. We only closed 50% of this opening range gap. We never closed it entirely. So let me go back to it. And we closed it entirely on the trade I took. Um, that's what I was wanting to see. Now, we were in a bearish downtrend. We had made this high here, failed to take it. We kept making lower highs. We were still making lower lows in the market. So what I wanted to see the market come up and take buy side liquidity. We had a new day opening gap, and it is somewhere. It's not there. That's 3:15 a.m. That's not it. A new day opening gap can be used up to for 5 days. 6 p.m. is here, so it's not. Oh, well, it could be around there. Or it should be around this line. There it is. Okay, so we got the opening range gap here. We got the end dog here. We got 1 hour buy side liquidity here. We're in. I was not convinced the market was just going to leave this remaining of the opening week gap. Not only that though, look at this, guys. So what did we have at the bottom of this? We had one of Trump's news candle lows. And it's not like normal news, of course, but when the market is freaking sends a rocket ship of a candle up freaking 300, $500, that just leaves a lot of orders and liquidity in between when it just gets sent up like this. And I mean, the market never took this high up here through the day. It left it. I can draw it up right here, and we never took it. So my thoughts were still bearish because we needed to close this gap. It's an opening range gap. We got this Trump news candle at the bottom. We got this end dog. Market's like making lower lows. I wasn't convinced that it wanted to just reverse from there. I had a feeling that we would still see this news candle low. We would close the gap and see the news candle low. So the moment I saw it come up and take this 1 hour buy side liquidity, well, if the market wants to reverse at that moment, it can. If it wants to continue higher, then it will. But I wanted to see short. So when we want to short, we wait for buy side to be taken. When we want a long, we wait for sell side to be taken. Now, this is just one of those days where it's a perfect trade. Um, the moment I saw buy side taken, I entered shorts and I set my stop loss right above that high. It was literally like a $3 stop loss. So I wouldn't have like lost, I think it was like $170 I could have lost on, and that was if that's 20 micros and two minis, $170 stop loss is pretty damn beautiful. But we came up, took buy side liquidity. What's that going to tell retail traders too, y'all? Anyone able to give me an answer on what traders are going to think? Turn on your mic, maybe say something or type it.
That we're gonna keep going higher.
Yeah, so retail traders are going to
Don't
think,
consider
okay, we're going to
don't
continue
consider it as a
higher.
break also.
Yeah. So they're gonna think, okay, we're gonna continue higher. And what's the market gonna do from there? It's gonna rip all their liquidity away and go lower. So you always want to do what the opposite of what retail wants to do. Because retail thinks, okay, we need to go long here because we just took a high. No, we're gonna look at the bigger picture. Look at how we have the news candle low. Look how we haven't closed this opening range gap. Look how we hit the 50% of this end dog, and we went right. We rejected it immediately. Um, look how we're in a down move because we're making lower lows and not higher highs. Yeah, market came up and took buy side, but yeah, if you're wanting shorts, you want to see it take buy side. And then you short because what did it do? It just drew the liquidity from a high. Now it can go low because if we want to go down, we got to go higher. If we want to go higher, we got to go lower. That's how the market works. It's going to draw liquidity off this high and then it's going to go lower. So I entered right when I saw this candle go through and I entered shorts like right here up in this area. And or no, it was right at the top of this candle. Yeah. So 417.50. My stop loss was 421, so $5. No, $4. And I just entered shorts. I didn't want to wait. I didn't have to wait for but it comes with experience being able to do this. Because what you guys would want to see was y'all would want to see this order block right here get used as you saw it get used, but then it got closed through and then used to the downside. So you have this bearish order block. The market wanted to continue higher, it would have closed that, respected it, and used it to push higher, and we would have seen it close above this wick. But you see the market also came right here on this wick, and it stayed under 50% of it. It only touched 25% and then pushed lower. So the market really didn't even have a chance. It immediately rejected that candle, that wick, touched 25% of it, went lower, closed through it, and used it to push lower. So that would be your opportunity for shorts. Otherwise, you could wait for an inverse, which you have an inverse right here. Market closed it. You could wait to see an inversion of this fair value gap. That's just what you want to see. You see it came it down, closed it, stayed below 50% of it, and pushed lower. Came back once more, tapped it again, pushed lower. So your entrance could have been off that inversion right there. Because on a smaller time frame, this is a low right here on a smaller time frame. This wick right here on a 15-second or 5-second, this wick is a low. The market closed past it. So I mean, it just took sell side right there. It took sell side that's right here on a lower time frame, and it had a continuation. And you could wait for this 1 minute inversion, enter off of it, target this low. But the moment I saw it take sell buy side, I entered shorts and I just let it play out. My target was right here. Was originally the Trump news candle, but I didn't feel like staying up any longer, so I changed it so I get out. Because originally this was news candle low, but then like I changed it to this low instead. I just wanted to go to bed at that point. I was tired. So I changed it from this news candle low to this low, and I let it play out. But as you can see, um, I'm sorry, I was showing y'all something and y'all didn't, it was on the wrong screen. So I originally had it for this low right here, this news candle low, but I got tired at 2 o'clock in the morning, and so I changed it to here, and I just let it play out. But as you can see, it still wiped out the target. We had a slight pullback, draw on liquidity, consolidation, manipulation, distribution. Um, so that's what I ran through on that trade. Let me pull back to that. But when I look at the market, and I don't always check the 4 hour time frame, I like the 15 minute. Um, but move eight drawings. The other day I was in my buddy's live stream with him, and he was bullish on the day. And I told him, I was like, nah, bro. I was like, look at this draw on liquidity right here. We got these 4 hour lows and these 4 hour lows over here. And he changed his whole mindset, and because he was bullish right here at the open, he changed his whole mindset and took shorts. I was pretty proud of that. I was like, yeah, told my mentor what to trade. Um, and I was like, yeah, he listened to me. But it's draws on liquidity like that. You will see high time frame draws on liquidity. You don't always, like I said, have to use the 4 hour. You can use the 1 hour. So I mean, what's the market gonna do out of? You have one of two things the market could do. It can take this high, or it's gonna take this low. And so you set up your draws of liquidity. You just wait for the market to show you what it wants to do. Is it pulling for this or is it pulling for this? As you can see, it came out, took buy side. Let's see where we got to on here. We got above the 50% initially, but the market rejected it, got back down below 25%, stayed below 25% of this wick, and then we came and took this low finally. So you can look at the high time frame and be like, okay, I know the market's either going to take this low or this high, and then you wait for the market to show you what's going to do. Now, it didn't do it in all in one day, but that was the bigger picture that the market was going for. You're not always gonna just have the most beautiful day in the world where the market's just gonna rip to that. Sometimes it happens, sometimes it doesn't. But at least you have a picture to aim for and that you can trade for a few days. You just have to wait for the setup each time. Then you drop to a smaller time frame and drop to the smaller time frame like 15 minutes. And then you set up smaller targets to aim for. You got buy side here, you got sell side here. Um, Here you go. So this is pre-market. 8:30 a.m. This is pre-market right here. What the market do? Came down at the open, took sell side. So what does that mean it can do? It can come up and take buy side. That's what it did. Because now we took sell side, we can go higher. Or we'll have a continuation where it respects a PD array and continues lower. But at the beginning of the day, right before market open, I can be like, okay, the market's either going to take this low or it's going to take this high. And then you wait for the market to show you what it's doing, and then you just take an entrance. You don't really have to like do much else. Um, this is not this. There's of course other factors that play into effect. You can always do your analysis and be like, okay, here's midnight right here. We went lower till 3 p.m., 3 a.m., 3 a.m. to 4 a.m. We consolidated like a bitch. No, we went lower. Yeah, we went lower, 3 a.m. to 4 a.m. So we have this small continuation lower. So the market's usually going to do this. We either go higher at midnight, lower during the 3 a.m. to 4 a.m. We're gonna have a, oh my gosh, I can't think of the word. I guess you could call it a pullback. We're gonna have a pullback pre-market, and then we're gonna dump on the New York.
The
So higher at
retrace.
retrace. Thank you, Blaine. Couldn't think of the word to save the life on me. Higher at midnight, lower during the London, 3 a.m. to 4 a.m. We're gonna have a retrace pre-market, and we're gonna dump on the New York. And it's in my notes. It's in my lessons page. Otherwise, we're gonna go lower at midnight. We're gonna go, oh, wrong one. Otherwise, we're gonna go lower at midnight. Same one, wrong one. Damn, sorry, y'all. Lower at, bro.
It's the last one.
Lower at midnight. Higher during the London. We're gonna have a retrace pre-market, and we're gonna go higher during the New York. It's in my lessons page. I've taught you guys it before. That's the typical bias development that you use. Use it on the 15-minute time frame. You aren't always gonna see that. What you see here is what? We went lower at midnight. Um, we really just went lower. This is one that, see, it doesn't always work though, which is the bummer. And with price action lately, it's been terrible. Lower at midnight, higher. See, like that shit don't work, and that ticks me off. But when you're setting your targets, you don't always, this bias, like I said, doesn't always work. It works most of the time. PA's been trash. But you can see, you can set your target before market open on 15 minute and be like, okay, market's going to either want to take these highs or it's going to take these lows. 930 hits right here. That's 157 to 75. It's a $70 trade you could have taken right there. Market opens here, 155 to 203. That's a 50 handle trade you could take right there, Mike. What happened here? You have this rebalance, stayed under 50% and a continuation to this target. That'd be perfect for you, Gold Trace, because you like to trade off rebalances. So we have this, it's taking sell side, takes buy side, rebalances in price, stays under 50%. Shorts, beautiful shorts. You don't even have to go for this. Yeah, you could have, because it hit it right before 4 p.m. That'd been a beautiful trade. That's what, 225, $425 trade? Two micros. You don't even have to do anything. You can do two micros. Oh, where are you? 20, 24, 250. Huh. Don't do 100. You can take two micros off of this and make almost 2 grand. What do you risk? You're risking 87 bucks and you make almost $2,000. And you could take a partial here if you wanted to. But you really that's a 10, 1 to 10 RR. Or is that a 1 to 100? Because 10 times 87 would be 870. 1600. So that's a 1 to 20 RR. You can't complain with that trade at all. I wouldn't. Not with two micros. You could take five micros. You're risking 200 bucks. You just made 4,500. You just passed the drawdown of a 50K funded account. And what'd you just do? You took out 2,500s. You could be a brand new funded that day. You just wait for this setup and then you take shorts. You just passed the drawdown and you just took a payout on your first day. You risked $200, you made 4,500. And that's all because I looked at the higher time frame, the 15 minute. I said, okay, the market's either going to take this low or this high. But I also had the bigger picture in my mind of, okay, the market made this high and it's not, we're making lower lows. And then we came up, took buy side again. So now we could continue taking sell side if it continues to want its sell side. What happened here, if I'm correct? Yeah, the market tapped into what? This last fair value gap. If the market's going to continue higher, it's going to close through it. We have one tap, we have two taps, pushes lower. So the market's in a bearish downtrend. It's not going higher. If it's going to go higher, it's going to close through this and use it to push higher. You're going to see it run through it, probably take this buy side that's right here, pull back, and go higher. Because we took buy side, got to take some sell side and push higher to take more buy side. That's what the market's going to do. But it tapped it twice, stayed right below it. It's the first fair value gap right here. It means market's bounced above. So it doesn't need to continue higher. It could continue lower. And then we get to this day right here. Market comes down, takes sell side, comes up, takes buy side. That's two beautiful trades you could have taken right there if you were paying attention to that. And it pulls into this wick, touches the 50%, and then it rips lower to your higher time frame target. Because remember, we looked at the 1 hour and we saw this low. We looked at the 1 hour, we saw this high. Market's going to take this high or this low. And if it takes this high, well then, what are we going to do? What's the next draw on liquidity? This high. You can use the 15 minute to look at smaller time frame targets. Those are going to be better for partials. But 15 minute, the 1 hour are what I like to use for targets. They're higher time frame liquidity. They're going to be bigger draws on liquidity. That's going to be where the market's going overall for liquidity. Because the market's going to push higher, it's going to take this. And then what's the next target going to be? A partial somewhere in here, but next draw on liquidity is going to be up here. Because this is the high we had before we had this huge run down. So there's a lot of buy side liquidity up here. So the market's going to want to reach for that. Why did it reach for here? Because these were the last two highs we had before this pushed down. Market took those highs right there, which allowed it to then push further down. Respected this, which means the market wanted more sell side. Once the market takes the amount of sell side it needs, it can push back higher. It's going to aim for this, and what's above on the higher time frame. That's really just how I develop my overall targets that I aim for. I'm looking at a bigger picture. We got relative equal highs right here. I mean, there's a lot that the market needs correction on to the downside before it can push higher. I think the Nasdaq's down like 12%, something like that. I don't think it's that bad now. But it's simple things like that. You don't have to overthink it. get too depth in the picture. We see the Trump candle high. We see it take sell side, push back up. It doesn't take this high. Creates these these fair value gaps. Respects that first fair value gap, which is usually the most important one. The first fair value gap in a run down or the first fair value gap in a run up. Those are the biggest ones, most important ones. Those are the biggest ones that you pay attention to, as I've taught y'all. Because that's a rebalance right there. If it respects this, it's a rebalance. The upside market won't need to come higher. If it respects a fair value gap that's down here, let's say there was one here, market comes down, taps it, respects it, and pushes up. That's a rebalance to the downside, telling you the price isn't going to continue further down. It's going to continue further up now. So what do we do pre-market? We went here. We looked at this on the 15 minute. We were like, okay, the market's going to draw for this. And you don't have to go for ginormous trades. These are just picking the small little, the small fruit, the nearest fruit. You can be like, okay, the market's either going to go for this low or this high. We open here, we ripped sell side. Okay, well now if you wanted to see this high, well we just rip sell side. So that means the market can go up now and take buy side. What it do? Went up, took buy side. Respect to this, respect to this. Now if you're bearish, well that's great news because now we just came up, took buy side. Now you can take shorts. And you can short all the way to right here because this is the very last candle before the news candle, or you can take it here. There's going to be a lot of liquidity here and here. This is the very last low before we had this push up. And so now if you're wanting shorts, well, it just rebounced. So that tells you what? It can continue further down now. Just took buy side, rebalance, shorts. Nothing crazy. Don't gotta overthink it. It's simple stuff. If you let it be. But we get in that mindset and we get in those emotions. Damn, dude, I've been tapped out of so many trades. Like, I don't want to lose this account. Um, Everything's riding on it. I don't want to go into drawdown. Okay, cool. This shit happens. It's gonna happen again. It's not like it's the last time you're ever gonna go into drawdown. It's not the last time you're gonna blow an account. It's not the last time you're gonna lose money. So what if it happens this time? At least you took the trade. You put those emotions to the side. You enter the trade. You trusted yourself. And what happens in the long run? Success. Um, Hopefully that helps Gold Trace with your questions. Um, let's talk. I want to talk about your trade, um, Mike, that you took. What was that, Friday?
The one DM'd you about, it's Thursday.
Thursday? Is it right here?
It was during New
What?
York.
Oh, it's 7:45 p.m. Are you on the 1 minute?
Yeah, mine was on the 1 minute. Yeah, if
And
you
you
go
said it's
to,
Thursday?
yeah, it was at like 10:13 maybe.
Makes sense
Or
why I don't see it. I was on the 15 minute.
oh, 10,
Thursday,
11, 10:11 a.m.
Friday. So you were like right in this area. Let's see what we got here. Let's draw out the 9:30 open.
Oh, that's Friday. You got to go back to Thursday.
I'll let you say it was Friday.
No, no, it's Thursday, the 26th.
There's the open
Yeah, that's the
right
area.
here. The open's here. And let's draw it to 11 o'clock because it doesn't look like your thing continues further than that. So you wanted shorts here.
Yeah.
And what made you place your stop there? Let me draw it out. I'm just going to draw it out. Are those fair value gaps inversions that you have?
Yeah, there was two inversions and then the black handle there was a retest right here with this little tiny candle.
Okay. So this is a bearish inversion. You have another one right here, and you drew it to that black candle. Another bearish inversion. And I'll let you take over and tell me your mindset
Yeah,
in
so
1 second.
there was this fair
Hold up,
value gap
hold
here
up,
too.
hold up. I'm drawing what you have on your chart. What fair value gap? Where?
On this black candle,
Which one? Oh,
it's you see it?
did you use that?
Yeah, I waited to see if we would respect it. That's why I entered on this black candle down here. I just didn't
Okay.
draw it in the screenshot.
So that's the trade you entered on there. And then you had it. What was your stop loss?
So my stop loss was like right above that black candle at let's see, 10:08, like right above the top part of the wick at 10:08.
Yeah. And you targeted here. Your stop loss was 22.50.
Yeah,
So, and your entrance was 173.25.
yeah, right when that candle closed at 10:11, when that black candle closed, that's when I would have entered.
And you're entering off of it closing through this fair value gap, right?
Well, it inversed two fair value gaps and respected that black one, respected that bearish fair value gap.
This one?
Yeah, you see the fair value gap that formed the bearish one at 10:08. It respected it with that doji looking candle.
So it respected this one.
Yeah, so I thought it was going to continue lower.
Stop loss was right there.
And in all honesty, I didn't think it was going to go higher because ES had already filled 50% of the opening range gap.
Oh, that just would piss me off.
But it's like I was saying, like even if I had re-entered, I would have re-entered on the what is it, like the 10:28 candle or 10:29 candle, and I'd got stopped out again.
Oh, that would just tick me off so much. Let's see if this is a bearish order block on a smaller time frame. Yeah, it is. Got a big green candle followed by two black candles. Oh, dude, that bums me out. This is one of those trades where it plays in your favor. It just didn't play in your favor. You did everything right. Because if you look at this, bro, we stayed under 50% of this wick. We stayed under this order block. But the biggest, I mean, you wouldn't even have to use the order block. The biggest thing is we stayed under 50% of this wick. I think your entrance wasn't the best you could have ran with, to be all honesty. I would have been wanting to enter off of this order block or this wick. Um, because damn, that's just the trade. Where you messed up on was just the entrance, and why'd you trade this chop is what I want to know.
Well, because like there was like a couple days like throughout the month where it looked like that, and then it would just like we would just get like a flash dump where there would be like no retrace or anything. The market would just dump. So I thought it was gonna happen again.
So let me ask you this: you FOMO'd?
No, I didn't even take this trade. on any account.
Oh, you
Yeah,
just
it
oh,
was a
you
paper
just drew
trade.
it out.
Yeah, it was a paper trade, but the thing is, I would have taken it though. You know what I mean?
Yeah.
Like that's why it's bothering me because like even when I back test this day, I still would have taken that trade and gotten stopped out twice. That's the problem.
Whoa. You have other factors playing involved too, because the market came up and touched this. So it wanted 75% of this wick before it went lower, if I'm correct. Because 240, or did it already tap that wick?
It
You have
only
a fair
tapped it only tapped 75% um after I got in.
afterward after
Yeah,
after you would have gone in. Okay.
yeah, it didn't do it before. So you're right. So maybe I should have waited for that.
Well, you have this. You say you entered right after 10 a.m. Um, so it'd been right before 10:15 a.m., which is this candle here. We were inside this fair value gap, this bearish fair value gap when you entered the trade. Let's see what it would have looked like on the 1 minute. So the market tapped it once, came down. So it didn't play into effect at all anymore at that point. Considering the fact that we had consolidated, we came in, touched this proportion block, pushed back up, touched this bearish order block, came back down, touched this bullish order block, came back up, touched this bearish order block, came back down, touched this bullish order block, came back up, touched this bearish order block. That's too much for me to really want to even try to attempt this. Because it was on a Thursday too, so like I just stayed off completely Thursday. I didn't even look at the chart on Thursday. I just wasn't a fan of it. Your target was right. Your target was 100% correct. Um, there's nothing you could have done. This is just one of those trades where like your target was right, your entrance was wrong. And there's nothing you can really do about that in that situation. With us consolidating, I wouldn't want to enter anywhere down here. I'd want to enter up here since this seems to be where the market is focusing around, is this area. So my entrance is going to be up here if it pulls back up into here. I'm not going to want to enter anywhere down here. If I enter anywhere down here, um, you would have gotten screwed right here on this wick if you entered off of this fair value gap. Like, because we came take sell side, push back up into this fair value gap, get pushed down, took sell side. And then we came up, wiped all this crap out, and then we pushed lower. This is a whole bunch of BS, bro. Your trade, your mindset was correct. Your bias was correct. Everything was correct on it. It was just your entrance. It looks like you were waiting for extra confirmation. Um,
Yeah, basically that's what I was doing.
did you have any thoughts about entering up here?
No, I honestly thought that if we kept pushing up to the top, I thought we were gonna try to fill the gap, the opening range gap. So I didn't want to take shorts up there.
Understandable. Your stop loss wouldn't have been big though.
Yeah, that's true.
You
Yeah.
like if you ended up here, it's okay. I mean, you 224 to 242, that's what like $16 stop loss. 241, 240, about 240.
So you do that
So,
sometimes? You'll enter at if it's respecting that wick, that big
yeah.
wick. Oh, okay.
Yeah, dude, if it's pulling up into this wick right here, I'm sure as hell gonna enter off of it, especially if I see a 50% tap. If it ain't closing past 50%, it's not even closing past 25%. It touched 50%, stayed below it. Got weaker. It got weaker right here. It got weaker right here. That's telling me right now that the market wants long ass candle, took buy side. Not as long of a candle, stayed under 50%. Not as long of a candle, stayed under even under this candle. Small wick stayed under this candle. That's telling me it's getting weaker. You were right about it. You were right. The market was getting weaker. 100% weaker. 100% correct. Your trade was perfect. 231 to 241. It's a $10 stop loss. On 5 micros, you would have risked, I don't even think that much. I think it's like maybe, let's see. Oh, why are you doing this to me? Why are you all the way down there? If you entered even like at the 25% and your stop loss was at the top, you risked 140 bucks. Your TP was 600, 1600. So, I mean, that's over a 1 to 10. That's like a 1 to 12 RR. So you're seeing the market stay below this wick, below 50%. You're seeing the market respect this order block. You can wait. You can enter up here. Your stop loss ain't gonna be that big. Especially like if you entered here, you could set your stop loss to the 50%. You could enter right here. And I mean, if you entered at the bottom, you could enter right here and your stop loss be at 50%. You just risk $92 to make 1500. And that's on 5 contracts. If you did your 2 micros, you're just 30 bucks and made 600. If you're seeing it respect this order block, you're seeing it respect this wick. That's all. That's enough for me right there to be like, okay, I'm entering the fuck right here. Like, nothing wrong with that. Instead of waiting for too much confirmation, now we've pushed down what, $50 when you do your 50 handle trade. So here to here,
Yeah, that would have been my
uh,
TP already.
that would have been your TP already. You would have been done for the day. You see it stay under 50%, take buy side. What's that mean, sell side? This is one of those situations where we're in just consolidation mode and it's just playing around, but it's respecting this wick and it's respecting this order block. So you could enter off of that. Nothing wrong with that at all. Your stop loss is so minimal. Even if you had it up here, you just risked 67 bucks and made 600. That's a 1 to 10. So, I mean, you don't got to wait every time for extra confirmation. If that's what Humble wants you to do, then go with what he's telling you. But if I'm seeing it play around in this area, I'm going to enter around this area. And if I enter around this area after we made this wick, well, then the top of the wick's going to be my stop loss.
Yeah, Humble kind of trades like you. I mean, the two of you trade basically the same.
Well, I
So,
learned from him, so I trade like him.
but like I don't know, it's like I told him this on Friday, but I get kind of scared like to enter like that, you know. And
Yeah,
he
understandable.
was telling me there was no reason to be scared because the stop loss, like there was like a long trade that we were taking, and like the stop loss was only going to be like $100 with like a full mini.
Yeah. So like, what's there to be scared about?
Yeah,
We're
it's
scared
just
to take.
that I'm thinking like I'm thinking of entering and then like it's just that like my normal stop losses, especially because I wait for the extra confirmation, are usually big, like how the stop loss is big on this, you know what I mean?
Yeah. I mean, you're scared. You're not scared to take this trade that Zari moves a significant amount, but you're scared to take this trade where if it moves just this tiny bit, well, then that's telling you right there the market's going to go higher. But it moves this tiny bit, that's very minimal of a stop loss.
Well, now that you put it like that, I wasn't thinking about it like that, but you're right.
Because the market's already moved a good bit. This is not the best entrance. The tops and the bottoms are going to be your best entrance if you can catch them. If you're seeing something like this, bro, enter here because you're seeing it respect this wick. You're seeing it respect this order block. That's telling you the market is not going higher. And then you see the wicks. Whoopsies. You're seeing the wicks get weaker. We took buy side. So that means now we can short. So because you were wanting short. So we took buy side right here. Comes up this wick gets weaker than this one. This week gets weaker than this one. I mean, you can draw it out too. I can sit here. I can put this on it. Gonna have to move it over. And you see it's getting weaker. So that's a perfect entrance. Like you couldn't beat that. Rather than it move $50 and then you enter. Because if we're consolidating, the market may come back up to tap into this fair value gap. I mean this wick one more time. And that's what it did. This wick hadn't been touched yet, or had it slightly. But the market came back up to touch into 50% of this wick one last time to then go lower. Because remember, Humble taught you the wicks always get touched. But yeah, that would have been your better entrance. Your bias was perfect. Your entrance just could have been better. And that's something I know you're working on is finding your entrances more. But I mean, if you're sitting here and you're watching the market and it's if you're wanting to enter a trade, I wouldn't really want to enter a trade if I see it consolidating like this for a while. I'll just get the fuck off. Um, but if you're seeing it do this, well, wait for it to pull up. If it doesn't pull up, that's fine, bro. Who cares? You're gonna find another trade. There's nothing to stress about in this situation. Is another trade is always gonna come. I mean, even if you didn't catch all this right here, well, let's look at this right here. You have an inversion. What does the market do afterwards? It uses it to push lower. And I know it's not as perfect of a trade. Why are you back at 240? Or how many micros are you taking right now?
Just one.
Just one.
Yeah. Um,
So I mean, even
I think
well,
we did because that Apex eval was gonna expire, so on Friday he let me take like nine, but usually it's just one micro.
okay. So look at this. This is a 50 handle trade right here. So even though you didn't catch this top, you still caught the 50%. And I mean, now you have more confirmation because you see this fair value gap bounced off of it, came up, bounced off of it, came up. Now it finally closed through it, then use it to push lower. So you could enter off of this area somewhere around here once we tapped into it. So even if you didn't catch right there, I mean you caught like right here. That's still a 50 handle trade. That's actually more than 50. That's 60.
I want to
And you
make a
still
point out here.
what was I didn't understand that.
No, I want to make a point here. So, if you
Oh
allow
yeah, go for
me,
it.
when the structure got shifted, the entry, whatever you have placed, the position, when the structure got shifted, there are two green candles that has been created. If you see that,
Uh-huh.
so after creation of that, generally accumulation happens, and then manipulation happens. And after manipulation, there was a change in state of delivery. Once the major big candle is there, that has gone and went inside the order block that you have created.
Hmm.
So that has taken out the liquidity of the earlier wicks, and the below two green candles, there is a change in state of delivery. Once that has been taken out, then we can take straight away a sell trade, and accordingly it would have gone and hit Mike's target too.
Yep. I mean, and you see this, and once you learn breaker blocks, Mike,
Yeah, I have to go back and watch those videos because that still confuses me.
that's not the right one. Um, Look at this. So we have a green candle right here. It took this high. What happened next? The market came. No, that's not right. Oh, no, that is right. I'm sorry. So it's a bullish breaker.
Yeah,
But
you're right because I do have like an indicator for it, but I have the indicator turned off because it draws too many things.
yeah, But you see how the market tapped it, pushed higher. Well, the market came back then, closed through it, and used it to push lower. So you could enter off this bullish breaker once it closed back through it to enter shorts. But you could also have just waited because you see, and as retailers would call it, this is support. So you could just wait for it to close through this fair value gap and inverse it, and then take it lower because closes through it, uses it to push lower. So you can enter off of here, even if like you entered off of what here, 67, 115, 117. You could enter off right here, and you would have still made your 50 handle trade. But if you enter off of here, that's like a 60, that's an 80 handle trade. If you enter off of here, even midway down, that's a 60 handle trade. So you still did your 50 handles. You got your extra confirmation because what happened? It closed through this. That's also very important because I'd want to see it close through this. But that would be my confirmation. If I'm gonna not enter up here, I want to see it close through this. That's gonna tell me that the market's gonna go lower at that point. Because I could draw out this black candle right here, and if I drop to a smaller time frame, this is gonna be an order block. You see how it closed? We have a bullish order block right here. And I'll drop to a 15-second just to confirm it with you guys. If I can find it. There we are. So I mean if you drew the whole bullish breaker, you can draw this one here. And you can see how it used it, closed through it, and then it used it to go lower. But I mean, even if you use just this bottom one on the 15-second, it closes through it, uses it, pushes lower. Enter off of here, there's your 50 handle trade. Now I know you don't have that, so why was it lower on the 15-second? That's because of that wick. So on a lower time frame candle, that's a wick right there. But as you saw when I drew it, this was a breaker. I mean, this was a OB, and then it closed through it, use it to push lower. I mean, you can even use this wick. We closed through the wick, came up, tapped 25%, went lower, came up, tapped 0%, went lower. So there's multiple entrants right there. This inversion of the fair value gap, this wick, this order block, respecting this wick above, respecting this order block above. If you wanted extra confirmation, I would have watched for this wick, I would watch for the inversion of this fair value gap, or I'd watch for the inversion of this order block right here. Those would have been the ones that would tell me. Because from after we took this sell side right here, we had this huge push up and we stayed above. We stayed above 50% of this breaker. So in order for me to consider wanting to go lower, I want to see it close through this breaker because it's the last low. This is the last major low we had before this push up and consolidation. If I don't want to enter up here, if I'm not confident in it, I want that extra confirmation, then this order block, this inversion would be what I look for, or this wick. That's what I would have done. Your hypothesis, your thesis, your bias, everything was right. Your entrance just was in the middle of that whole range, and that's where a lot of people get chopped up in, is in that middle of the whole range. Because like if I draw this, you were more in the bottom range of it on your entrance. I'd want to be at the top of the range if I'm wanting shorts. But yeah, the trade was good, bro. I mean, it just your entrance could have been a little sweeter. You wanted more confirmation. There's nothing wrong with wanting more confirmation. I just would have gone, I would have entered off the top. Your stop loss would have been more minimal. But yeah, that's just me. And again, that comes into time and experience, comes into learning to control your emotions and learning to trust the trade, trust yourself. But I mean, that's about it. I don't think there was really any other questions um on anything. Um,
I do have one more question. It shouldn't take too
yeah,
long. You said that you usually skip lunch and then you come back for like a macro that's like after lunch.
no.
Oh,
Well, I mean, if you're trying to catch the afternoon session, then you can. Um, if I'm gonna try to catch the afternoon session, and I haven't done this in a long time, I'm off at 11. The only reason I'm on the chat still with you guys is either I'm paper trading or if I'm just talking to you guys about anything. Um,
I was like, you just don't recommend the afternoon stuff.
I mean, if you didn't catch a trade in the morning and you're really still wanting to catch a trade, the afternoon can move very beautifully. Um, my favorite
What
time,
time would you? Yeah.
I would want to do it 1:30 to 2:30 and then 3:30 to
Okay.
4:10. That's because that's the lunch session, then like the end of the day session. Well, that's the evening session. So like 1:30 to 2:30, 3:30 to 4. Now, if you don't want to do those sessions, you can just do the macros. So you can do 150 to 210, 250 to 310, or 350 to 410 if you just want to do the macro. But if you're trying to hop on for a session, I'd do 130 to 230 and then 330 to 410. Sorry. Those are the times that I've seen the market move good. Um,
Yeah, I'm looking at Thursday to, and you're right. Like those windows were like perfect.
because if I come here and I set it to 130, we have a huge move right there. You got 230 right here. So we have this move, rebalance, sell side. So that's a nice trade. That's 972 to 853. That's a $120 move. And then you got, and this doesn't always happen, guys. So don't think that you're gonna catch that end of a day crazy trade. But this is 330, and you don't see this, but it happens every now and then. And it's happening a lot lately because of Trump. Then you have this 334.10 and it moves 837 to 765. That's a 70, 80, that's a 60, $70 handle move. So those are two chances to catch some liquidity. Um, I love how 410, tiny little candle, 411, big ass candle. I wonder what caused that. I still don't know what caused that. Trump did.
Yeah, Trump
Trump's
said he
gonna,
was gonna put a pause on like a 3-day pause or something in the fighting in Iran.
huh, he's just taking the market and then he's gonna post on Twitter, it's a good day to buy.
You know,
And the market's
I've
just,
been waiting for that.
yeah, the market's just gonna yeet itself like it did the last time he pulled that crap.
He needs to start doing it again because I used to have his True Social open, like waiting for him to say buy or sell.
No, not much to of insider trading right there. Nothing serious. Not see not much to SEC felonies right there.
Well, the way I see it, right, is like technically, I guess you could say it was insider trading, but it was available to everybody, so we
Yeah,
could
so it's
all
not
make
really
money.
insider. Yeah, so it's not really insider trading. It's public info.
He was running a free trading Discord signal
Yeah,
alert
he just get
service.
yeah, he just fucking alerted everyone that day. It was just like anyone who sees this, buy. I still can't believe I missed that, dude. I was so upset because I was still like trying to trust myself in ICT. So the day he sent that, just literally 10 minutes before he sent that, I had hit my TP. So I was done for the day. And then he sent out that tweet and the market exploded to the upside. And I was so mad. And then like I kept sitting there watching for the remainder of the day. The market take buy side, a little bit of sell side, then it take buy side, then it take a little bit of sell side, and just continue rocketing up. And I was too scared to trade because the candles were like 40, $80 candles, and it was just moving. The volatility was crazy. But I mean, it just ripped buy side, and I was so mad because I was just too afraid to enter, and I could have probably made like 10, 20 grand on my take profit.
You know what's funny? Like you always come off as like super confident, so we never thought you would get scared in the past with entering.
When I first started ICT, fuck yeah. Fuck yeah, I was scared reckless, bro. Even with the experience I had beforehand, when you're learning a new strategy after the one you used, you trusted with your life, and you're learning something brand new, and you haven't gotten that time under your belt using it and just understanding it, you're like, fuck, what if something goes wrong? I only can lose 2,000, $4,500, whatever it may be. And I just wasted 5 days of work, and I don't want to have to start 5 days over, and I don't want to pay more money, all this stuff. And so all these thoughts are running through your head, and you're confident that it's going to go this direction. You understand that it's going to go this direction. You just don't know where to go in, enter at, or you don't trust where to enter at. And then give yourself a year and a half down the line, you're like, fuck it. You're like, I'm just going to enter here. Like